FXN Trading Group, welcome back as we continue our Market Maker Method series. On this video, we're going to go ahead and we're going to talk about the trend, resets, and peaks. All right. So there's three different subjects we're going to cover in this video. So let's just go ahead and jump right into it. The first thing we'll go ahead and cover is going to be the trend. All right. So with the trend, there are two different types of trends. One is the market maker trend, and the other is the retail trader trend. Okay. So the trend is set by the market maker and can be reversed at any time. This is very important for you to realize and understand. All right. Because once you understand, this will give you an edge to trading both directions. Okay. So you got to understand, guys, that there is two trends, a market maker trend and a retail trader trend. Obviously, the retail trader trend is what everybody else sees, and the market maker trend is what they're actually doing. Okay. Now, do not become so biased that you miss the setups. So, what do I mean by that? When you're looking at the charts and you're looking at the 1 hour to try to find the levels and things of that nature, don't be so biased in one direction or another that you miss the setup. Understand that if it was easy, if they just repeated the same thing over and over and over again, everybody would do it. Everybody would be successful. Okay. So market makers will change things up all the time. Okay. And that's just to fool everybody so they can make as much money as possible. All right. So understand that the market maker can change and reverse at any time. So let's take a look at what typically happens day one of the trend. So trend is generally a 3-day cycle, right? Day one is the reversal day or the peak formation high or low, right? This is at the beginning of the week. Okay. Now, what happens is the market maker, this comes as a surprise, as a market surprise, right? So it catches retail traders off guard when day one reversal happens. Okay. And they try to do this because if you can get traders, let's say the trend that the market maker wants to go is to go higher, right? If you're at the peak form low from the previous week, everybody already is thinking that they're going to go short, right? So, of course, market makers are going to make a false move to the low to get everybody to go in on a sell. The reason that they do that is so then they can trap you for the next 3 days, okay, as they're going in the opposite direction. News events will be used to justify or falsely or falsify the market maker actions. Market makers love to use the news. So when the news happens, this is when they make their moves. So please understand that. The more you understand, the faster you understand this, the better you're going to be. So news events will be used to justify or falsify the market maker actions. Okay. On day two, what happens is the retail trader trend and the traditional technicals are validated. Okay. So on day two of the trend, typically this is when you have the 50 and 200 cross. Okay. All the retail traders see this and they're like, oh, yes, yes, this is a trend. I know where the trend is going, either up or down, right? Moving averages indicators will cross over and fire signals for everybody to start trading. This gives the opportunity for the trend following technical traders to hop into trades. Okay. And we're going to go over this on an example so you can see what that looks like. But just understand that this does happen on day two typically most of the time. Now, most of the retail traders may still be unsure at this point, and some will actually wait for another confirmation to get in. And that typically happens on day three. So let's talk about day three. So retail traders are now convinced that this is a real move, right? So they've been watching this trend for the last 2 days go up and up and up. On day three, they're finally convinced, right? And they're just waiting for their opportunity to go long. Well, what happens? As soon as they get into that opportunity to go long, they get trapped and the price drops. So market makers show the acceleration and separation from the moving averages. You'll see this when you see the separation from the 50 and the 200. They start to separate and widen, right? That gives the illusion to the retail traders that that is the right direction to go, not thinking that they're about to be slaughtered by the market makers. Now, market makers will use news obviously to help validate their story, but most times they are just faking you out and inducing you to take a trade. Okay. Do you ever notice if you ever traded on NFP on Friday, how that candle at 8:30 will spike so high and then do nothing but retrace all the way back down, and literally all you're left with is a wick for that 8:30 candle. You ever notice that? How many people do you think got caught in that move of buying? Okay. How many people do you think got caught in that move of buying? All right. It happens all the time. So be aware of it. When market makers have collected enough contracts at a specific level, they will apply the brakes and trap traders. This is when we talk about moving out of the Asian box and going to hit either the low or the high, right? To induce traders to make a trade, to get into the market. So as soon as they do, market makers pull away the opposite direction. They got you in the contract, they got you trapped. You ever have the feeling of when you got into a trade, as soon as you got into a trade, that it went against you and it continued on the opposite direction? You ever had that happen to you? This happens all the time. Why do you think 90% of traders always lose? Okay. You have to start thinking like a market maker and not like a retail trader. Every time that you go into your charts, think like a market maker. Don't think like a retail trader. Think like a market maker. How would you trap them? How would you trap retail traders? This is how you have to think psychologically every time that you look at the charts. All right. Let's take a look at a quick example here. So from here, you can see that we have our peak formation low right down here, right? And then we have our our um, our ketchup and water cross, which is the 13 and 50 cross, and then here we have level one, right? We move up, we have our 250 cross, and boom, we go up, right? So that's level two, and then we're up here to level three. Remember, by this time here, this is where everybody's convinced that the trend is going up. Everybody's convinced that the trend is going up. So what happens? They move down. Traders might get in here. They might get in here. They might get in here. Hell, they might get in down here, right? To buy, to buy, to buy, to buy. And look what happens. Hits a high, hits a high, hits a high, and reverses. Okay? These wicks here is what I'm talking about. This is all used to trap traders. Okay? If you think about it, breakout traders that trade breakouts, they have pending orders to buy here at this level. There's hundreds of thousands of dollars trapped here. Okay? This is why you see these wicks, because the market makers are literally going up there and getting these orders. And then as soon as they have enough contracts to make their move, they make their move. Okay. So keep that in mind, guys, when you're looking at this. So let's talk about resets and peaks. So there will be times when market makers will need to continue the trend and not reverse directions. Okay. So keep this in mind that there will be times that the market makers will not reverse at level 3 and they'll continue to go up. Okay. So just always be aware of that. Remember, the market makers can change directions at any time. Okay. They don't run off of time, right? Everybody here, us us traders run off of time, right? We're always concerned about, we need to find a move during this time set, or we need to find a move during US session or London. Market makers don't give a shit about any of that. They don't worry about time. Okay? They move whenever they want to move. All right? So just keep that in mind. Sometimes this is why sometimes you'll see the Asian session gets blown out by 50 to 70 pips. Okay? Because everybody's expecting them to do it during London or during US session. Nobody expects it during Asian. Okay? And sometimes they will move during Asian. It doesn't happen very often, but it definitely does happen. All right? So just keep all these things in mind. Resets are used by the market maker to book profits and continue the retail trend. Okay? The reason that they do this is to book profits and continue the trend, because the more suckers they can get into the trend when it's time to reverse, okay, they're just going to have that many more people trapped and they can book more profits. The reset will represent a new peak formation, and 3 more days of rise or drop can be expected. Okay, I'm going to show you an example of a reset so you can see it on a chart and you know what you're looking for. So again, keep in mind that the reset will represent a new peak formation, either high or low, and you can expect 3 more days of rise and drop. If no one falls for the reset, there may only be one more level of rise or fall. Okay, so if they cannot get suckers to go in long, okay, for the next 3 days, they will only do one more level of rise or fall. Okay, in this case, one more level of rise before they make the drop. All right. That's why in some cases there can be 4 or 5 levels identified. Okay, if you look at a chart, sometimes you will be able to identify 4 or 5 levels. This is why. All right, guys. So let's take a look at an example of a reset here on USD Swiss. So here is the peak formation low, right? And then here we have the cross of the 13 and 50, level 1, right? Here we have the cross of the 5200, which is this right here. So this will be level 2, and then here would be what we would consider level 3, right? Hit the high, hit the high, hit the high, right, and then drop, right, and then we would expect, you know, level 1 down, level 2, and then level 3 back down, right? Well, look what happens here. Price moves in this range or zone. This right here is a reset. And you know that it's a reset because if you've already had 3 levels, okay, and it breaks out of the 3rd level like this, that is a confirmed reset. Okay. If price doesn't break this high, if it doesn't break this high, it is not a reset. Okay. And I'm going to show you an example of that so you can see. But if price has to break level 3 in order for it to be a reset. Okay, so here's your reset. It breaks out of that level, and then we go on to another level. Okay, in this case, it would have been another level, and then we would have gotten some drops. But this is a reset right here. Okay, so remember, for a reset to occur, we need the 3 levels, and then if on the 3rd level, if we if we break the high of level 3, like we did here, this is your reset here. If this did not break and it just came down, this is not a reset. Okay. So here are some examples here of what a reset confirmed, reset not confirmed is. Okay. So here we have the cycle right here, right? We're moving down, and then we're supposed to reverse, go back up, right? Well, in this example here, you can see price didn't come back down to break this 3rd level here, right? In this example, we would make the M, but we would go back up, right? So this is an unconfirmed reset. Same thing if we're going up, right? If we're going up, we're at level 3 here. We come down, right? And we see that we do not break this high here. It is not a reset, okay? Because in this particular scenario, price would start to move back down again. Now, let's talk about confirmed resets. Here we have a confirmed reset. The 3 levels, we're at level 3 here. We're going back up to do level 1, and we create an M, and we break that level. Once we break this level, this right here is our reset, okay? And then we continue on to the levels, either 3, 4, 1, 2, whatever the case may be. But this is your reset here. So you have to recount the levels after this reset. Same thing if we're going up. Here's level 3 here. Come back down. We typically would expect what? A move down again, right? Because this is level 3. On this example here, we went ahead and we passed the high of level 3. This is a confirmed reset. So this right here would be your reset, and then you'd have consolidation again here, and then that would be level 1 again, and then so on and so forth. Okay, so these are the resets that you need to be aware of that will happen. Okay, they don't happen often, but they do happen. Okay, so just be aware of it. So confirmed versus unconfirmed. Let's go ahead and take a look at the chart here. Here's a peak formation high, and then here we go to the levels, 2, 3. You can see we go up and we break down. That's a reset right there. Okay, you see how when we come over here and we go down to it, we didn't break the low. You see that? We didn't break the low. This is an unconfirmed reset, right? We didn't reset here. We just kept going up higher, right? We never broke the low. All right. So the 3 levels of drop, 1, 2, 3. We would expect this to go up again. We didn't. We went down and we broke the low, right? That's your confirmed reset. We had 1, 2, 3 levels, kept going. Here's another third level right here. We broke it again, 1, 2, 3. Came back down to the peak formation low. We rose, came down. We didn't break the low here, right? We didn't break this low, so it's an unconfirmed reset. We keep going up. All right. Guys, one last thing. Thank you so much for watching my videos. I really appreciate the fact that you take the time to watch my videos. I really hope that I've added value in each of the videos that I make for you guys, and I hope that you're learning something. As always, guys, please make sure you subscribe to the channel. Please like and share the videos if you found value in them. And also, don't forget to visit our website at www.fxntrading.com. Once again, guys, thank you so much. I'm truly blessed.